Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over what happened in the markets today. What happened to Tesla? Is this now a bearish reversal? Are we seeing issues now? Is the daily finally ready to reset and at the very least come back to that 9 exponential moving average? Again, I'll give you my thoughts moving forward. So if you enjoyed, don't forget to hit that like button. This is not financial advice and I'm not a financial advisor. Of course, if you enjoy my technical analysis, thoughts, and the charts updates, well, again, I do have a YouTube membership where I'm constantly sharing thoughts, posts, updates every single day as the market is trading. So definitely check that out. That link is down below. If you're interested, all you have to do is click this button right here in the description of any video, and it'll take you to the page where you can sign up if you're interested. Again, it's just $3 a month, gives you access to all my Tesla updates, options flow, technical analysis, broader market updates as well when it's necessary, of course. Tier 2, just for $5 a month USD, adds NVDA to that whole pool as well if you're interested for all those updates as well regarding NVIDIA, again, as the market's open and trading. And then $7 USD a month includes everything else. So all the non-Tesla, non-NVIDIA, non-broader market updates on different individual tickers. And on top of that, Discord access, right? The private Discord, we have a member chat room, we have weekend chart reviews, etc. So again, definitely check it out, guys. We'd love to have you there. But yeah, jumping into it, Tesla, again, down on the day, about just over 2% on the day, closing out just shy of $4.17 per share. So what happened essentially, right? What is going on with Tesla stock? Well, I mentioned on the 1 hour time frame that, we were essentially developing and actually breaking out of this potential small little bullish pattern over here, which of course is going to be a rising triangle pattern. Now, obviously not every pattern is perfect. And we came back down to retest that. But the second this level was lost, like I mentioned, and the second we started losing below this range, about 420 to about 425, this $5-ish range, which we pretty much, for the most part, spent the vast majority of today in. You can see the last candle, the second it broke through, well, that became a problem, right? So you have to be really careful with these things. And I was telling my members this whole time that this is really important to understand that, this 1 hour time frame that that we're looking at right now, yeah, it can go a little bit higher, and we did. For instance, during the day itself, we went to 232. Pre-market, we actually went even a little bit higher to 233, 434 almost in pre-market, right? So we entered those 430s, but like I mentioned, right, to me, first and foremost, this 1 hour time frame, and this is, again, I kept iterating this to my members. It's important to understand this is short-term games. The daily, at least until now, wasn't giving us any information. It's still very overextended. So anything here, it's short-term. It's short-term games. You're playing with short-term, movements, right? Quick kind of in and out, more or less, right? It's more day trading is essentially what I was trying to say and what I was saying in my video yesterday, right? And that's why I say it's something to be careful because the stock was very overextended. You are, in my opinion, like I said, a little bit playing with fire, right? You can get a quick little pop. There's still money to be made, but especially considering that daily, was entering, like I mentioned many times over, not only in the daily, but the weekly, 430 up to 440. I do view this area as a significant resistance, right? Whether it's the daily, just classic resistance level you can see there, or take it into account the fact that the weekly is entering those green Fibonacci's, right? Very massive area of resistance, at least for now. Maybe we can break above it later, but at least for now, it would be very, very shocking. And I mentioned this to my members as well in one of the earlier posts. Blah, blah, blah. I think it was this one. Yeah, I think it was this one. Enter the 1 hour time frame. The daily is still extended relative to the 9 EMA. Hence why I'm mainly looking at the 1 hour for now, since the daily is not going to give us too much info yet. However, the info we do have is that the 430s region is still, in my view, a massive area of supply. Bulls really need to find a way to clear it. And I don't know if the first attempt here will be enough. Usually these large zones need a larger consolidation on the daily to build up momentum to clear it. Either way, 430 to 440 is a huge wall right now, especially since it's the green fibs on the weekly as well. That doesn't mean we can't get deeper in and really test that, but worth mentioning that this is a major battleground in my eyes. And then later on, when I made another post mentioning how I do view this as short-term, right? This is all short-term tightness, right? Short-term tightness, not that one, sorry, it's this one here. How this is all just short-term. I reiterated many times before that this, and it's worth saying again, this is shorter-term games. The daily is still very extended without any meaningful signals yet, right? It's important to understand the difference between the two, right? So again, just figured I'd mention that to make that, very understandable, I guess you can say. So we can delete this for now. But the thing I look at now, I don't care about the 1 hour as much anymore because the daily is now giving us some signals, right? What is the daily giving us? It is giving us a potential bearish reversal pattern. This is a bearish piercing candlestick pattern that we have now shown and printed, if you will, on the daily time frame, where it pretty much looks like this, right? You can see, compare the two candlesticks. Tell me it doesn't look almost the same. It's almost as if they took this picture right here and put it into this here, didn't they? Almost the exact same, the last two candles, right? Take a look at these two candles, pretty much the exact same. I'm actually gonna put it right here. Let's see if we can make a difference. Man, it looks almost identical, doesn't it? Tell me it doesn't look almost the exact same. It's like pretty much the perfect depiction of it. But nonetheless, it is a bearish piercing candlestick pattern, right? So it is something that is going to be now worth watching. The way these bearish candlestick patterns, whether it's the bearish piercing, whether it's a bearish engulfing, an evening star, whatever. The way they usually get triggered, like I mentioned many times over, and bullish ones as well, is in this case specifically because it's bearish, a red day tomorrow. If Tesla does close essentially below 2 days low, or pretty much in other words, because we close at the lows of the day, if Tesla closes red tomorrow, essentially, that would give this bearish reversal pattern, this piercing candle pattern, substantially more validity. Now, if we don't close red tomorrow, if we actually close in the green tomorrow, let's say we go back up and we close, I don't know, 425 as an example, or something like that, or higher, for instance, that would actually potentially nullify this pattern. But if we close red tomorrow, it does give this bearish pattern substantially more weight. And that would signal the fact that we most likely are ready to begin that consolidation and that cool off on the daily time frame back at least to the 9 exponential moving average, which is also conveniently sitting pretty much right around this gap fill, closer to $395 to $400 per share. So again, if tomorrow is red, yeah, expect that, right? And even now, I would still most likely, give the bears the benefit of the doubt. And, again, I've said this many times, when the 9 EMA is this far away from price, I don't really trade the stock, right? Maybe I'll play some short-term games. I actually did play this 1 hour short-term. I actually exited for break even, thankfully. So I ended up avoiding a lot because the main reason I exited, I actually bought it after hours just to give you an example of my thought process. And then we opened the day up, actually up slightly. And then pre-market, it kind of tumbled a bit. And then it pretty much went right back to where I bought it, right? But the reason I exited is because the stock, to me, it does feel a little bit heavy, right? I would have entered it if I saw some nice buying pressure here, but obviously I wanted to wait till today finishes. We didn't obviously see that. But another main reason is because the 1 hour MACD is just extremely elevated, right? That's the one thing I like about the MACD sometimes, because you can see how crazy elevated something is to the upside or to the downside. We were just extremely elevated to the 1 hour to the upside, and it just felt very heavy. The stock felt very heavy to me because of that. So I personally exited for break even and pretty much didn't look at the stock anymore in terms of a trading perspective until now. Well, better signals emerge. I usually like to trade off the daily time frame personally, and the daily it's just extended again. So moving forward, like I mentioned many times over, let's watch for this potential bearish pattern to play out down to at least the 9 EMA, closer to 400 to 395 gap fill as well, 400 support, psychological level, etc. That will be the main level to watch for, especially if tomorrow ends up being a red day. So let's continue monitoring, guys. Let's continue seeing what this shows us, right? We also have, like I said, another reason, the 4 hour SMI was curling all the way up here, right? Tesla usually respects the 4 hour SMI, right? All the way down here, you can see whenever this thing starts curling at the top or the bottom of the range, not too long after, we start finding the stock to be starting to get a little bit heavy, starting to find some toppy signals, right? Starting to look to, at the very least, consolidate slightly down. If not, maybe get a sharp reversal, right? Depends on the situation, of course. But the point is the fact that it almost every single time has signaled, on the upside at least, that we probably aren't going up too much higher, or vice versa. On the downside, we probably aren't going down too much more, right? It's usually pretty accurate. It's been pretty good, in my opinion. So now this thing is most likely going to be ready to cool off. The daily will cool off. And if the stock begins to cool off down to crucial levels, like I mentioned, that is going to potentially just present another opportunity. I don't think Tesla's done yet. I actually think once this cool off begins and once this cool off happens, I do think we'll actually develop a bullish pattern. And I actually think we'll probably get one more push up at least. But like I said, until Tesla really clears these green Fibonacci's on the weekly, 430, 440, I do remain cautiously optimistic, I guess you can say. I do remain optimistic, I do, right? But there is a damn good chance that between 440 down to about, in my opinion, as low as 380, I really wouldn't be surprised if this whole range right here on the weekly, daily, whatever, ends up being just a very large consolidation range for some time. We can get some volatility in between them, don't get me wrong, but for the most part, we don't really potentially go anywhere too much because we have a major resistance above us, but we have major support below us, right? Worst case scenario, if it happens to be a sharp fall for whatever reason, I think worst case is back to 350s. That to me is like the worst case scenario while still maintaining a bullish outlook, but I'd be surprised if we go down that far. I personally think that if we do drop more significantly, I think 380 probably-ish will be the lowest we'll go as of right now. So expect some consolidation between these. But like I said, guys, the bulls need to break these green fibs. I've been saying this many times over, and I'll keep saying it until either we break it or until we really confirm some bearishness from here, because this could still be a very large dead cat bounce, which is offsetting essentially, right? Because that's what dead cats do. They essentially offset a sharp move to the upside or downside, right? You get a bullish or bearish dead cats, right? This is obviously a bearish dead cat, right? Where we had a massive bearish drop into a bearish dead cat to essentially offset this extreme pressure to the downside to kind of, it's almost like an equilibrium type thing, if you will. And then potentially, with these Fibonacci's that are really good at, determining these kind of situations, we could get a rejection from here and make our way down, potentially even substantially lower from here. That is, again, the bear case, right? But that to me doesn't really become a factor until either, again, we just cannot break above this, but especially if we lose this trend line. Those two factors need to both be essentially pointing to yes, right? As long as if those two factors start pointing to yes, then we most likely become a potential very bearish move to the downside, right? It will be very, very bearish. But as long as this trend line holds, and especially if the bulls break above these green fibs, then I do continue leaning bullish, right? But until then, again, just don't be surprised if maybe we get some consolidation between this range around this general vicinity for the next potential several weeks even. So don't be too surprised, guys. Don't be too surprised. But that's kind of all I got for you right now, right? For now, again, we look to see what this bearish piercing candlestick pattern potentially has in store for us moving into tomorrow. We have a lot of options expiring tomorrow. Tomorrow is not expiration. Tomorrow is triple witching. We have a lot of expirations tomorrow, so we could get some, wonky volatility, especially if you didn't know, last 10 minutes on those kind of days, check out the stocks, man. Usually the last 30 minutes to about the last 10 minutes, you'll see some very wild price action. It's very entertaining. But let's continue monitoring this moving forward, guys. And I'd definitely watch for this bearish piercing candle with the potential now cool off, getting ready to activate, if you will, on the stock to the downside. So let's see. But overall, Qs, right? Still pretty bullish. A bit of a, questionable indecision type candle, doji candle today. So that could signal a potential stalling of momentum, right? But, I'll move back down to the 9 EMA with nothing more than fresh bullish opportunities. But like I mentioned on the Qs, the main levels I'd watch for is this level, and these levels. These are the 3 levels to watch for, at least in my opinion, to potentially determine if bearish pressure is coming into the market. Previous all-time highs, the more recent one being lost, concerning, because that also loses the 9 EMA. But then we'll have the 21 EMA support. So, we'll see. But essentially losing that, concern number 1, losing about 575, concern number 2. And then, of course, losing all the way down to about the 560s is concern number 3. So let's continue monitoring that for the market itself. But as of right now, the bulls are still in control. Nothing is signaling major topping signals for the market yet. So, if you're shorting up here, in my opinion, you're gambling. You are gambling, right? It's kind of like when a stock is tanking constantly, right? So for instance, if you reverse this, it's like this. Yeah. For instance, if you saw this right here, would you be buying this? I mean, you can absolutely risk a buy. This could be a nice, bottoming doji signal right here with a stop loss essentially below this. In this case, would have been below this candle. You can technically make that risk, I guess you can say, but you are buying a falling knife, right? If this is what the stock looked like, this is a falling knife. Worth mentioning something sometimes like that when inverse a chart, right? It gives you a bit of a different perspective that's worth understanding, I guess you can say. But those are the main levels I'd be watching for in the broader market to watch for potential concerning signs developing. But as of right now, so far so good. Options flow on Tesla stock, what's happening here, right? A lot of more bearish flow towards the end of the day, right? Mostly bullish flow for the day, but you can see towards the end of the day a lot of more redness came in with purple behind it. It usually means aggressive bullish or bearish flow in this case. For tomorrow and next week, a lot of bearishness came in for tomorrow and next week. So some bullishness too, but more bearishness for sure. More aggressive, quicker weekly to next week expirations for bearishness came in. So the bears are looking to play out this bearish piercing candle. It looks like they're looking, they're smelling blood and they're trying to attack. So let's see if that works out. But anyways, that's all I got. Thanks for watching. See you tomorrow. Peace.